really means to live life golden. Yeah, we're golden, baby girl, we're golden. Yeah, about to see it shine.
How's it going from your perspective, and how does it compare with what you expected?
Yeah, expectations, it's meeting expectations really in the early days as open interest is building. Our dedicated liquidity providers are getting comfortable trading a new commodity in this case. So it's business as usual from a launch perspective. 3,000 contracts, as you point out. That's a lot of 1 and 2 lots, and that's a lot of our participants getting ready and scaling up. So I expect to see a little change in that, in those transactions over time.
I'm curious, when you talk about your participants who are involved in this, who those participants are. I mean, we've talked to some of them, the traders who are based down at Cboe, but I'm curious what you're also hearing from larger institutions, whether they're nibbling yet, whether they are giving you any indications that they might be moving into the market.
Yeah, let me give you some perspective. So at launch, we had about 12 known participants. Those are registered traders on our CFE. We're up to about 22. And they represent various end users. So we won't see that clarity for quite some time. But you can see from 12 from the launch up to 22 during the U.S. trading day. That's a big change, and I think we'll see that build over the days and weeks to come.
Some commentators are saying that the fact that you priced from Gemini might be a disadvantage given that CME is going to take pricing from a few different exchanges. Any plans to expand that?
Not at the moment. We're really pleased with the partnership with Gemini, the transparency into their auction price, them knowing their users, and information sharing from our regulators' perspective was very important. Ours is a very tradable, trader-friendly contract in that the moment in time on settlement, you're really indifferent whether you're holding Bitcoin futures or the actual physical Bitcoin. We like that construction of the contract.
And is there any change, I'm curious, also planned to offer a physically settled contract? Because that was something that I know got a lot of attention.
It did get a lot of attention. At this point, we're really pleased with the rollout. We're going to stick to the futures contract. I think you'll see some buzz around the potential for security ETFs and ETNs as a result. I think that'll take some time, but I think you'll see that as the next frontier in the evolution of bringing Bitcoin to a more broad base of users. But that's got to get the SEC ready, and they're going to have to get comfortable with that oversight.
Yeah, what other contracts might come out of this? Mini contracts, other types of trading derivatives?
I think we will see derivatives. We need to get through a number of different settlements, whether it's our settlement process with Gemini or our competitor's settlement process with an index. I think you will see derivatives as a result, but it'll be in the months ahead. It should not be in the weeks. And as I say, it'll be a longer process getting our regulator, the SEC, ready for ETFs and ETNs.
Well, and as Vani said, what about a mini contract? Because when you're talking about 16,000, 18,000, I mean, that's a pretty big piece to bite for retail investors, certainly.
It is, and we're 1/5 the size of our competitors' contracts to give you some kind of a scale.
Right.
There might be room for a mini contract in the weeks and months to come.
I'm very curious about whales and the potential for whales and the idea that somebody can see some price action, figure out who actually is in the market and maybe corner it somehow. How are you, staving that off?
Really difficult to do. We are a very transparent market. Our information sharing with Gemini allows for us to have transparency into their process. And then we're used to regulating a futures market. So we have the cooperation of all of our users. So we know our users, and we'll have the accessibility to look back, reconstruct trades, and share that with the CFTC, our regulator.
Won't it be too late by then if a whale does indeed appear?
It would be difficult. You have to affect the price of the currency across multiple exchanges. If, for example, you used the Gemini auction as a reference point, we have collared that auction with an index, GBXT. So we'll be looking not only at the settlement price from Gemini, but that settlement price has to fit within an index of other Bitcoins. So in order to affect that price, it would be pretty much of a global effort at this point. So we'll be able to see those large trades coming.
I mean, this raises the question of clearing risk also, right? And as you know, the Futures Industry Association raised some concerns about clearing risk and about sort of what they perceived as maybe a rush to market. So what made you sort of say the risks are worth it? We're going to go ahead. Not only are we going to go ahead, but we're going to be the first ones to go ahead. When you were weighing it, what convinced you that it was worth some of these risks?
Yeah, two different questions there. Yeah. I do think that from a CCP's perspective, the appropriateness of the margin level was really taken into account. So this is a bit higher margin than we're used to seeing.
44%.
So I like that. I think the contract, the limitations in and around expiry of 1,000 contracts, consideration about, back to your question on the settlement process. From the FIA's perspective, I think it's a little bit unfair letter in that we've been very, very vocal and out in the open that this has been about 6 months of work bringing this contract to market, not the overnight reference on self-certification that was referenced in the letter. So this is months and months of work with our regulator, the CFTC. So as I say, about 6 months, so not truly overnight.
You said yourself just a few minutes ago before we were on air that you're a reformed trader yourself. So
Always recovering.
I'm going to ask you your opinion on why, spot is trading at whatever it is, and there's such a huge premium. It's trading at 18,200 now, 21% premium for a futures contract that's not even that far in the future.
So what we're looking at really is the premium around trying to pick a settlement price out in the future and a highly, highly volatile underlying. So I think that might come in. I think arbitrage will close that gap, but it'll be days and weeks. It's not going to be the 12 hours or so that we've been up in trading. So there's much to learn, and I think there's a great deal from a liquidity price perspective to see what they're going to expect in those coming days as we come into our first settlement process. So I think that closes over time.
Speaking of it being very early days, we talked about the margin requirement at 44%, which is higher than most of the other, if not all of the other products. Any indication that that would come down if you see certain conditions met, if you see an increase in liquidity?
Too early to predict. I do think we'll see underlying liquidity build, book depth build. That will be some of the first steps in order to lower that margin, but we're too early days, and I trust the process. OCC is our clearing agent, and I believe that interaction will take some time.
Do you own any, by the way? Are you allowed to?
I am allowed to, and I don't own any at the moment.
Ah, he's thinking
He doesn't own any at the moment. Does that mean that you did?
No. I never have.
Thinking about
Not yet.
maybe dipping his toe in.